Options involve risk and are not suitable for all investors. Options investors may lose the entire amount of their investment in a relatively short period of time.
Today we are going to dissect a stock option quote. Stock options are contracts, and there's a lot of terms and conditions in the body of a stock option contract. And what the quote does is it actually highlights the main points of the terms and conditions of the contract. So, for example, when we look at our quote here, the first thing we see is a symbol. This symbol is XYZ. Now that's going to represent the underlying stock symbol. So it might be Amazon, General Electric, Nike, but most option contracts represent 100 shares of stock. So in our example, we're talking about 100 shares of our made up stock XYZ. Now next to that, we have a date. As with all contracts in general, they usually have an expiration date, and that's very true in the stock option world. Our expiration date is December 17th, 2017. After that day, this contract ceases to exist. You can no longer trade it on any exchange. So with stock options, you have many different expirations to choose from. They can go for as little as a few days out to as long as a few years in time. So the next thing we look at, we actually see a strike price, and then we see a type. Now, as far as the options are concerned, the strike price goes hand in hand with the type. So in our instance, our strike price is 70. This is the price at which the underlying stock will be traded at if the buyer exercises their right. Now, if they'll be buying or selling depends on the type. In our instance, we have a call option. That means that the owner of the contract will have the right to buy 100 shares of stock at a strike price of 70. And hence the term call means that we can call stock away from somebody. If this was a put option, you would have the right to sell 100 shares at that strike price of 70. And the reason why it's called a put is because you are putting stock to somebody at that price. So lastly, we get to the most important part of the quote, the actual cost to buy the contract. In the options world, that cost is often referred to as the premium of the option contract. Now we know this option contract represents 100 shares, and this quote is priced on that 100 shares. That means that if we see it $3.10, we need to multiply it by 100 to get the total cost of the option contract. And in this instance, it would be $310, and don't forget commissions whenever you're trading options. So, bottom line is, when we look at an option quote, it tells us a lot about the terms and conditions of the contract very quickly. We know that in our quote, we're talking about 100 shares of XYZ. The expiration date is December 2017. We have a right to buy that underlying because we're buying a call. The price that we'd be buying it at is $70, and the total cost is $310 plus commission. So that's it for this episode. I look forward to your questions and comments below. And in the meantime, may all the options that you buy finish in the money and all the ones that you sold finish out. Until next time.